Welcome friends, today we're talking about 3 stocks to buy right now in the fintech space after they've been hit hard over the past 6 months. All of them have great growth potential ahead of them, some are more mature than the others and they all operate in another subsector of the fintech space. Let's get into it. If you're new here, I'm Robert, welcome. This is the channel where we're trying to look at things from an unbiased perspective, looking at the pros and the cons to find the best potential investment for long-term minded investors. If you're new here, please consider subscribing and liking the video, but let's get into it. Let's just quickly talk through the stocks themselves. So I've prepared a little Excel spreadsheet here where I basically note down the key metrics that you want to look at for companies like that. But let's quickly discuss them. So the first one on the list here is PayPal Holdings, trading right now at $118 around that. They all had a pretty good run in the past 5 days when the market kind of rebounded from really low estimates. But if you zoom out further, you see this is just a small blip on a large scale. They're still heavily down from their all-time highs, which was peaking out in last year, 2021. So yeah, it's still interesting to look at those. So PayPal, obviously we have the PayPal app, and then which everyone knows, and then we have Venmo, which is the second really strong growth component of PayPal, expected to outgrow PayPal in terms of the growth rate in the upcoming years. This is just what the CEO announced recently, and obviously PayPal itself is a very mature business itself, has already produced a lot of profit for their investors and is generating a lot of strong free cash flow. And at the moment we're looking at a revenue growth of 15% for the next year, for the current year 2022. The gross margin is sitting at around 45%. EPS, earnings per share, around $5 is the estimate for this year, and the free cash flow around $6 billion. This puts the stock at that current level at a price of earnings to 25, where they've historically been sitting more around a 40, which obviously is a strong discount from historical high valuations. And you could have said that, okay, 40 seems a bit high, but given the growth rate and given the strong execution of management, PayPal just kind of deserved that higher PE ratio. It's similar to a kind of Amazon if you look at it from that perspective. Okay, the next stock on the list here is Voyager Digital. Is a crypto platform trading at a $6.50 in the OTC market, so over the counter, not really available to all investors out there, but also trading on the Toronto exchange in Canada. They're a crypto broker, having a lot of coins available on their platform with also staking rewards, so you can trade and you can reward and earn an interest or earn that stake rewards from staking the coins. But also going forward, they also want to be enabling you to pay with crypto by having their first MasterCard now issued, the debit card, and the credit card is on the horizon. So they're expanding heavily. They're growing. They're only available at the Canadian and US markets at the moment, but they're expanding towards Europe this year, 2022. And this is expected to grow, massively. Analysts expecting growth of 200% this year. Gross margin sitting at a whopping 85%, whilst obviously operating margins for Voyager and SOFI here on the list is negative. That's something to mention. But EPS, very important, is as I said, at the moment negative from last year's numbers. But this year we're expecting to see profitability based on that strong revenue growth and the strong margin. We do expect the company to see profit this year. So this is very exciting, and obviously that's always a turnaround point for a lot of stocks. And at the moment, Voyager is trading therefore at a price to sales ratio of only 2, while having this massive revenue growth and gross margin, and also while expecting to be profitable this year. So this is probably the best opportunity right now that I see in this fintech space. But let's move on to the next one for now. The next one we're talking about is SOFI Technologies. You all probably know it. It's trading at $9.72, which is below their IPO price when they did the SPAC merger and went public last year. So yeah, below that $10 mark. It's trading at price to sales ratio of 6, which gives them a market cap of around $7.8 billion. Analysts expecting them to grow 40% this year, whilst having right now a gross margin of 70%, and still looking at a small loss for this year, but definitely a narrow loss than we had past year 2021. And the deal with SoFi here is obviously that they're an all-in-one super banking app. You can, satisfy all your banking needs within one app. You have the banking, you have the loans, the credit cards, but also the investing and saving and daily banking activities all in one app. More skewed towards the younger people, younger generations like millennials and Gen Zs. Very comfortable with using an app and not having a branch, not having many real people to talk to in the real life. But yeah, obviously, they just came out saying that they will have a fee-free crypto transaction, crypto brokerage on their platform as well. And one of the biggest news that we had in 2021 or early 2022 actually was that their banking charter was approved. So this year, around May, I think, this year they will be operating as a bank, basically being able to get money on a cheaper level than before, being able to provide customers with better offers, better interest rates, but also getting money cheaper, meaning that margins will be expanding, so that the gross margin here, that is the current gross margin of right now, is actually to expect to be even better. But yeah, looking at a price to sales ratio of 6 right now, so it's still not as low as Voyager, but that is just pretty much to the fact that SoFi is quite a hyped, quite a popular stock. It's obviously available as well on the Nasdaq, whereas Voyager is just waiting and working on getting onto the Nasdaq. So SoFi is definitely more known, more out there, therefore trading at a more premium level. And what I've done here, so I have the key metrics here that we just ran through. Then here I've given them based on the company type. I've given them a future fair value PE or price to sales, depending on what type of company it is. If it's profitable, we're going with PE. If not profitable, we're going with price to sales. And then you can see the upside potential. So for PayPal, historically they've been trading around 40 plus PE. I've definitely draw that a little bit down because with the kind of environment that we are in right now, with interest rates going up, suppressing valuations, so the hype is not out there right now. So I would have assumed that if it comes back to a more normalized levels, it should be sitting at anything around a 35 to 40, or let's say 30 to 40, midpoint here 35, giving them an upside of 40% right now based on the current levels. And Voyager Digital, that's obviously what I've just been talking about before. I think this just been unjustifiably hammered the stock, seeing a really upside potential here of 250%. If I give them a 7 price to sales ratio, which is not even a ridiculous valuation, given that strong revenue growth, strong gross margin, and the fact that they're expected to be moving in towards profitability this year, I think a 7 price to sales ratio is pretty much justifiable. And that's only for the fact that they're still trading at an over-the-counter stock. If they were to be listed on the Nasdaq, I do think that this kind of stock would definitely then be justified to pay a premium for, and whilst it gets to a wider investor range out there, why more people will get to know about it. It gets also on the radar of sort of Wall Street and other big institutions, and then it could easily trade at a 10 price to sales ratio, which would give them a 400% upside from current levels. So this is definitely the most exciting one. Obviously it's a more riskier one because it's kind of like a very new company, unknown. There's a lot of competition that's coming onto the market, like SoFi just launching their fee-free crypto transactions. So there's a lot of companies that are out there that are offering the same, but given that strong execution that we're already seeing right now from Voyager, I think that it's justified that we can see at least a double to triple up from here, which is obviously fantastic. And then moving on to SoFi right now, as I said, trading right now at a price to sales ratio of 6. I've given them a 10 based on very strong revenue growth and the fact that in that revenue growth and then in the gross margin, that is just the current gross margin, we don't even have incorporated the effect of the bank charter yet. Might even turn them into a slight profit this year, but that's we have to see how much an effect will that have for the second half of the year. As I said, the bank charter and basically improved gross and operating margins that effect will only kick in really from May onwards. So we have to see if they're able to really have a strong execution and being outperforming that EPS estimate and turning it into a small profit. And if that was to happen, if SoFi is signaling that they can operate at a profit, and if they can already, surprise Wall Street to the upside on that, we will see massive run-ups in that stock. I can show you that, I guess. So SoFi, yeah, I've given them a 10 based on the fact that it's already very popular out there. A lot of people are interested in it. So if that goes back to reality and the macro fears subsiding, I would say that SoFi trading at a 10 price to sales ratio based on the growth numbers is nothing unrealistic here. And that would give them an upside of 67% from current levels. I hope this was valuable for you. Obviously, those are just my estimates. Those can might as well really change to the upside and downside. So you have to do your own research to get, assurance around that. I'm just here for entertainment purposes. And I hope you like this video. Let me know if you buy any of those. Let me know if you're interested in any other videos and any other stocks that I can cover in the, in the future. But enjoy your week and see you next time.